First Trust Preferred Securities and Income ETF, FPE, is a passively managed exchange-traded fund, ETF, that aims to provide investors with access to a diverse portfolio of preferred securities, which are a type of debt security that generally pay a fixed rate of interest. Preferred securities are often issued by financial institutions, and are considered to be a hybrid between bonds and stocks. They typically rank higher in a company's capital structure than common stock, which means that they have a higher claim on a company's assets and earnings in the event of bankruptcy or liquidation. One of the main advantages of preferred securities is that they tend to pay higher yields than bonds, making them an attractive option for income-oriented investors. The FPE ETF seeks to track the performance of the Wells Fargo Hybrid and Preferred Securities Aggregate Index, which consists of a diversified mix of preferred securities from a variety of sectors, including financials, utilities, and real estate. The FPE ETF is managed by First Trust Advisors, a leading provider of ETFs and other investment products. The fund has a low expense ratio of just 0.47%, which is significantly lower than the average expense ratio for actively managed mutual funds. This means that investors in the FPE ETF can keep more of their returns, rather than paying high fees to fund managers. One potential risk to consider with the FPE ETF is the fact that preferred securities are typically more sensitive to changes in interest rates than bonds. When interest rates rise, the value of preferred securities tends to fall, as investors can earn higher yields by investing in newly issued bonds. This can lead to volatility in the FPE ETF's performance, which may not be suitable for all investors. Overall, the First Trust Preferred Securities and Income ETF, FPE, is a solid choice for investors looking for a diversified portfolio of preferred securities that provides a steady stream of income. With its low expense ratio and diverse holdings, the FPE ETF can be a useful addition to a well-rounded investment portfolio.